The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you on a busy Tuesday, which is why I'm talking so fast. It's also probably because I had a big old cup of espresso before the show started, so it's both of those factors. But we do have a busy program today. We've got earnings from 5 of the largest banks in the world. We've got oil prices moving up for a second day in a row after escalations in Iran. We've got Mr. Warsh taking to Congress, testifying in front of the House panel. Inflation out this morning, IBM warning of bad earnings, lots of news all over the place. And in the latter half of this hour, we'll be joined by Riley Sullivan from the New England Policy Center at the Federal Reserve Bank of Boston. So a lot to cover today, but probably the first thing to get into, especially given that Kevin Warsh just started his testimony just 7 minutes ago in front of the House panel, would be inflation. By the way, I'm looking at the camera of him, and not that I would want to be testifying in front of a House panel either, but he just gave like the fakest smile laugh. You could see it in his eyes, like really don't want to be here, but I feel like I have to smile and laugh. And then it just immediately went away back to a frown. So, you know, as anyone would be testifying in front of a House panel, he's taking it seriously, but probably doesn't want to be there, like nobody else would want to either. Part of the job. CPI released at 8:30 this morning, Marc. We saw an overall price decline. Prices became cheaper, according to the BLS, in June compared to May. No big surprise here with gas prices cratering after the... what are we calling it? The Memorandum of Understanding, MOU, between U.S. and Iran that is now being pretty much canceled this morning. But let's talk about prices in the month of June, because that's what we got at 8:30. Prices declined by 0.4% in the month of June. That was more than anticipated by the average economist. That means that they're still up a good 3.5% year over year, mainly because energy prices are still up by 16% compared to June of 2025. What I found most interesting, though, Marc, and you know, this is where I want your input. Like, we knew energy prices were going to decline. What I don't think we had a firm sense on was what, you know, prices outside of that area would do, and they flatlined for the month of June compared to May, which I think I can only take as good news unless we're heading into a recession. But talk to me about how rare price declines actually are, because we don't see them very often.
They're rare.
Oh, thanks. Okay, well, we can move on now.
Only twice. You see them in recessions for obvious reasons. Demand collapses and prices come down.
Houses get cheaper, cars get cheaper. You know, people sell stuff. People buy less stuff.
Let me qualify that. You see them in some recessions. They were very common in the pre-World War II era, but that's not really a good comp. Right. Since the Fed became activist, really trying to manage business cycles, trying to smooth them, stimulate demand when it sags and vice versa. Disinflation, falling prices, aka disinflation, has become far less common, even in recessions. But it does happen. And when it happens, like in mid-2022, June or July, energy prices fell after the initial Russian surge in Ukraine, and then CPI came down. And it happened again a couple of years later when energy prices fell. It tends to be very fleeting. And this is well, go ahead. before.
Well, I was going to say, this seems like the definition of fleeting, given that we're seeing oil prices spike again this week.
Right. This is why the Fed can take some heart, but not much from this. The Fed is it's concerned about not what inflation does month over month. It's concerned with what inflation is doing over longer periods. It's concerned with the trend in inflation. Mm-hmm. And that's why headline CPI typically takes a back seat in policy discussions to not just core, which strips out food and energy, which we all know can be jumpy, but other measures that trim extreme price movements. Sometimes we talk about the median, which is an extreme version of trimming. It trims everything but the very middle observation. There are other ways of getting at the trend in inflation too. Unfortunately, none tells you in real time what the true picture of inflation is. And this is the challenge for the Fed.
So again, headline numbers here, month over month price decline of 0.4%. Most of that coming from energy prices, which declined nearly 6% on the month. Gasoline stations, for example, you saw gasoline prices down 9.7% in June compared to May. They're still up, like I mentioned, compared to last year, to the tune of 26%. So, we have a ways to go on all of this. But I want to, for a moment, strip this piece out because, like you mentioned, while the Fed cannot completely ignore energy prices because energy price shocks can lead to prolonged inflation like we saw in the 1970s, they do tend to look through it and are more willing to, I guess, look past an energy shock than prices overall moving up in one direction. When we do just ignore for a moment the food and energy picture, prices excluding food and energy were flat month over month according to this survey. June to May, 0.0% inflation. And some of the big heavy hitters there saw very little in the way of price increases. So shelter, a huge component of the core prices, up 0.1% month over month. New and used vehicles, both flat to down month over month. Apparel down month over month. And so overall, like across the board, we saw a period here of, again, one single month, but it appears to me moderation really across the board. I'll be interested to see what that median number looks like when it comes out. I don't know if we have it quite yet.
No.
I don't think we should count a single month and
never
hang the banner of
never.
mission accomplished.
If you're trying to lose weight, you wouldn't declare mission accomplished after a good day. We all know that you need to take an average. The same is true of any estimate. We don't know what's really going on with inflation. We never do, or with employment. These are all estimates.
Yep.
Therefore, you need to take, as you often do, several months and then annualize it. You need to somehow turn several observations into a trend. There are lots of different ways to do that.
Nonetheless, I think when you look at this report, while not immensely surprising, right? We knew that energy prices were going to decline in June, given what we were seeing at the gas pump. We knew that food prices were continuing to increase, but no new signs of spiking. So not surprising on those items. But I think, well, to put it plainly, were the core prices, when you strip out the food and energy stuff, if you see core prices to consumers follow the trend that they did in June for a few more months, this would have to be looked at as great news.
We'd be worried if they did, because that would indicate demand is contracting, probably. Think about core inflation as a measure of the degree to which overall demand is growing faster or not than overall supply. Disinflation in a modern economy is not a healthy sign. You don't want prolonged. The Fed spent years hand-wringing about low inflation in the early 2010s. Right. You'll recall it was a real concern because of the Japanese experience. Greenspan worried about it too the decade before that. So the Fed wants neither disinflation nor uncomfortable inflation. It wants stable prices, by which they mean a slow rate of increase, so slow that nobody's even thinking about it, that it doesn't affect decision making.
Again, the reason you don't want disinflation or frankly deflation, you don't want really high.
No, disinflation is okay. I'm sorry, I should have. Go ahead. Sorry.
The reason you don't want really high inflation, just from a pure consumer behavior standpoint, if you think prices are going to skyrocket in the future, then you bring your prices forward, you bring your purchases forward, and it can cause more inflation. deflation, prices going down in the future, has a different economic effect, right? If I think that my Volkswagen is going to be cheaper 6 months from now than it is today, then I'm going to delay my purchases, and I can sink the economy into a further recession by delaying purchases.
Yeah, I mean, this was the problem in the early stages of the Great Depression. We were on a gold exchange standard, which meant you could only do so much. Monetary policy effectively couldn't stimulate the economy without jeopardizing the ratio of dollars to gold. So we had serious, and all the developed economies did. It's the last big case study, which is why I'm going back 100 years. Sorry. We had serious deflation, actual falling prices. What happens to the value of what you owe? Your mortgage, car loan, stuff like that during periods of deflation, it goes up. Mm-hmm. You're going to default. Banks are going to fail. It's very bad. So the Fed wants, again,
why you want moderate price increases? 2% would be great.
2 to 4%, most researchers think is reasonable. Some are on the side. And there's an argument for higher inflation because the Fed can only cut rates by so much in a recession,
right?
And you want real rates as low as possible under some circumstances. That's a little bit technical, but I guess the takeaway is honest people can disagree about the right rate of inflation. Very few think it's 0. A good number think it's 2, which is the Fed's goal. A few could tolerate higher inflation. In theory, the economy should be able to adapt to any rate of inflation.
In any case, head of the Federal Reserve, Kevin Warsh, as we mentioned, testifying before the House panel this morning. Most certainly he will have commentary about this inflation report, even though it's not their preferred measure of inflation. In any case, a surprisingly low rate of inflation, a surprisingly good inflation report out this morning, not only because of energy prices, but other areas as well. And we'll be looking at the coming months' reports to see where we get confirmation, or, do we see oil prices swing back in the other direction, as we'll be talking about more on the program. Let's take a quick break. When we come back, I do want to talk about the oil price surge that we are seeing. Big move, most in such a short period since 2020. So quick break. We'll be right back with oil prices next.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
The most important part of an inheritance isn't always the money. It's the understanding, the intentions, and the family relationships left behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, estate planning isn't just about who gets what. It's about communicating your values, explaining your decisions, and helping to avoid misunderstandings after you're gone. Our new guide, Talking to Your Kids About Inheritance, explains why these conversations matter and what to consider when fair and equal may not mean the same thing. You'll learn strategies for managing expectations and helping your family understand the thinking behind your plan. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. Heart Walk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
Well, the West Texas crude benchmark is up another 2% this morning. On, July 2nd, we were down at $68.58 a barrel. Since then, we've surged about $11 to where we are now, just shy of $80 per barrel on that West Texas benchmark. Taking a look at gasoline prices here, which are, as we're all used to, probably swinging upward rather rapidly, faster than they came down, most certainly. The national average for a gallon of gas, according to AAA, is sitting at $3.86 per gallon. A week ago, actually, no, not swinging up as rapidly as oil prices. A week ago, that average was $3.79. So, a month ago, we were sitting over $4 a gallon. I'll be surprised if we don't get there again should oil prices remain this high. But all comes after yesterday's announcement from, the weekend's increase in hostilities and yesterday's announcement that President Trump wanted to impose a 20%. What are we even calling it? Toll?
It's called a toll.
Tariff?
I think he called it something else.
Something like
a
that.
Fee, a service fee or some euphemism.
I do honestly take this a lot like I would look at the initial announcement of tariffs back in April of 2025. I'm not certain how serious any of it is or how much thought has gone into it. I certainly don't think that there is much of a means of collecting this without a congressional approval or even negotiating with foreign countries. So I'll take it with a grain of salt. But I think the important thing to understand is that tensions have escalated again in the Middle East, as is not terribly surprising to anyone. And we aren't really certain to what degree traffic will be able to flow through the Strait of Hormuz.
Yeah, as you and Chuck have talked about a lot, we're not going back to the pre-war status quo.
Right. To that end, I think countries surrounding the Middle East are going to continue to pile money into infrastructure to avoid the Strait of Hormuz or have at least a secondary option for moving their oil outside of the Strait. But, that's only so useful, right? There isn't just oil prices. It's not just oil that moves through this strait, although that is one of the most important factors, right? You can't exactly ship aluminum through a pipeline. You can't easily ship fertilizer, so far as I know, through a pipeline. So that's, not exactly a permanent solution. Not to mention, I would think if you are the Iranians and you see the Saudis and everybody else building infrastructure to avoid the Strait of Hormuz, you're likely going to consider that a legitimate target for,
good point,
bombing it with a missile or a drone. So this is not a perfect solution. I do think generally 10 years from now, the Strait of Hormuz is probably going to be less critical in terms of the percentage of stuff that goes through it than it was a year ago. But here we sit, and once again, oil prices moving up.
That's a good point. How do you secure all this new infrastructure? Look at what Ukraine is doing against Russian energy infrastructure right now in Crimea and deeper, way deeper, hundreds of miles into Russia. Why could Iran not? They're using similar technology. Iran, I assume, you make a great point. I hadn't thought of it, I'm embarrassed to say. They'll probably devise means of doing the same thing. Now that they've learned that they can put the world economy in a chokehold, they're not going to let go of that leverage lightly.
Yeah, I'll be interested to see, look, how all of this develops, right? I still feel that oil prices, even where they got to, $112 a barrel, I think 120 overnight one of those days when things were really hot, I still don't feel that there was an immense amount of pressure on the Trump administration to make moves there. There's clearly, they knew where the path was going if they didn't make some changes there. But I do wonder if we just settle into this status quo of, okay, we're heating up with Iran and then we're cooling down enough for enough traffic to get through the strait to avoid all-out catastrophe when it comes to oil supplies, while not getting to a place where things are overly comfortable.
But we can't sustain our presence there indefinitely. The
not.
bill is already into the hundreds of billions properly accounted for.
True.
Even at some lower level of conflict, it still adds a not insignificant percentage to annual defense budget. So either way, there's going to be an interest rate cost is my point. If we have to borrow more, that pushes up rates. There will be a premium on oil from now on, because on any given day, we may toll it. The Iranians may toll it. Oman may decide to toll it. Everybody's in on that game. It's just a different, riskier world.
And then one other, heavily overlooked factor that nobody has a perfect read on is China. Not that China is controlling anything through the Strait of Hormuz, but as we've talked about on this program, they have been the world's largest net buyer of oil. They have dramatically reduced how much they are importing. You can, look at some of these charts from the IEA and others where they really show just how dramatically the oil imports from China have dropped off a cliff. And the question is, how long do they, A, want to, or B, are capable of doing this? Most experts think quite a bit longer than they have, but China does not produce oil, at least not in significant enough quantities to be able to curtail their appetite for it. They have significant reserves of oil, but how long those might last is an open question. Most estimates that I've seen have been that China's demand drop has been to the tune of 4 to 6 million barrels per day that they are not buying on the open market, and therefore allowing other countries to purchase, refine, and do so at relatively lower prices. Should that need to change, or should they choose to change that at any point in the future, you could see a pretty significant price surge in oil. And so big questions about this kind of silent player in all of this and how they develop their own policy when it comes to energy over the course of the next few months. We've got to take a quick break. When we return, a full market update with Wall Street Watch. Dow was negative in pre-market trading, but has turned positive. We'll have a full recap next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's DAV5K.Boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trusts. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Very busy day on Wall Street as traders digest second quarter bank earnings and inflation reading and ongoing testimony from Fed Chairman Kevin Warsh. Right now, the Dow is up 0.2%, S&P 500 up about 0.4%, NASDAQ up 0.7%, Russell 2000 is up 0.2%, 10-year Treasury yield down 4 basis points at 4.56%, and oil jumping over 1.5% higher, trading right around $79 a barrel. Investors saw a softer than expected inflation reading that slowed to 3.5% in June, better than estimates of 3.8%, and down from the 4.2% reading in May. Kevin Warsh also began his testimony before the House Financial Services Committee, stating the Fed has no tolerance for persistently elevated inflation. As for bank earnings, JPMorgan Chase, Bank of America, Goldman Sachs, Citigroup, and Wells Fargo all reported better than expected results for the second quarter. All of those stocks are in positive territory on the day. And outside of bank earnings, IBM stock is plunging nearly 25% after the tech giant posted weaker than expected preliminary second quarter earnings, attributing the miss to customers spending their money on chips and servers amid AI-driven shortages. Sales from IBM's infrastructure division were especially hit hard, dropping 7%. Once again, IBM stock down by about 25%. I'm Tucker Silva, and that is Wall Street Watch.
Tucker mentioned the big banks reporting earnings. Wells Fargo actually slightly negative now for the day, down about 0.33% after being positive for the morning. I don't see any news that sent it this way, but their earnings beat wasn't all that impressive. First thing to say about these giant banks and their earnings. One, unless your job is to analyze bank earnings, the way that they report and how their businesses work are so complex and convoluted and heavily regulated that it does take a degree of expertise that Marc and I don't admittedly have. So I don't want to consider myself some sort of bank analyst. It is complicated. These banks do everything under the sun. They're almost regulated utilities from that perspective. But I think the big news from the quarter was that a few things pushed in the right direction for these giant banks, and the two of them that I can point to concisely across the board for all of them. One, there's more investment banking activity going on. Companies went public. SpaceX went public. Several other companies are talking about going public or issuing new debt, issuing new equity, all of which they rely upon giant investment banks like Goldman Sachs, JPMorgan, Bank of America, Citigroup, and Wells Fargo in order to do. In addition, all of these banks tend to make money almost like a toll maker in equity markets and bond markets and everywhere else, currency markets, everything. So if you trade a whole bunch, even though you might not be paying Bank of America a commission for trading like you used to for, Fidelity and Schwab and everything else, like a trading cost, all of these banks make money when you trade more. They're market makers. They make money on the spread. They sell you the stock that they have in inventory, and they're able to make a lot more money when things are volatile, especially when they're volatile and heading in a positive direction. But even when they're volatile and heading in a negative direction, these banks tend to make money on trading. In terms of most to least impressive, Goldman Sachs up about 8.3% today. Obviously, Goldman Sachs not exactly famous for a retail-facing bank. They are an institutional bank that serves the very wealthy. And so where they're specifically seeing gains here, one, their earnings per share came in at $20.98. The consensus estimate was for about $14. So dramatically beating expectations here. And where it primarily came from, investment banking was a huge surge here. Their global banking and market segment surged 53% year over year, mainly by, underwriting fees and all the stuff that we know that Goldman does and has been pretty slow, frankly, for quite a period of time here when higher interest rates and things prevented companies from going public. All of a sudden, you're seeing a surge in deal-making, acquisitions, IPOs, all that stuff that's helping out the likes of Goldman Sachs. JPMorgan also up today, about 2.75%. Similar story there. Obviously, a little bit more of a retail-facing bank. You can actually walk into a JPMorgan Chase Bank branch and do business with them, but nonetheless, huge status for deal making and IPOs and all sorts of investment banking business. Bank of America stock up about 2% today. Citigroup up nearly 2%, and Wells Fargo now down about 0.7%. Company just can't get out of its own way, it seems, constantly with Wells Fargo. The stock's about flat, up about 4% over the course of the last 12 months. The one thing to say about Wells Fargo is they did just have pretty recently the lifting of their asset cap. Remember that in the wake of their massive, are we calling it a fraud scandal? I mean, they effectively ripped off a bunch of their customers by opening fake accounts for them and were litigated for it and agreed to an asset cap for a long period of time. That's done now. And so they were effectively prevented from growing their business for a prolonged period of time. That has now been lifted. They're able to do so again. And Wells Fargo, likely doing everything they can to grow their business down the road. In any case, I don't think you saw anything that would be concerning. No, oftentimes banks, if they're concerned about the future, will take big loan loss provisions for what they deem to be future losses on loans that they've made. We did not see any big uptick there. Overall, as wouldn't be, is not terribly surprising, a massive beat from all these major banks in a period of high volatility, rising equity prices, and uncertainty around pretty much every area of the market, right? Energy prices, currency prices, a lot of concern out of the Middle East, alongside a very hot period of time for deal making, IPOs, et cetera, which these banks all make good money on.
Yeah, the environment's been favorable, like you said.
Yep. So I don't have a ton else to say other than report what they did. I don't have much of an outlook about what they might do in the future. Suffice to say, if there is a prolonged period of, again, more deal making, more IPOs, as we seem to be getting hints on, right? I mean, Anthropic wants to go public, OpenAI wants to go public, and we'll be talking later in the program about anyone in and around the artificial intelligence supply chain is looking to cash in at this moment in time. And so how do you cash in if you are a large company that is looking to sell your product or sell your company? You go to a giant bank like this to try and structure a deal. And so should that continue, I can envision a scenario where things continue to look rosy for these giant deal-making banks that are at least facing less regulation than they have been for the last 15 years or so.
Yeah, it's hard to think of a more favorable climate for the new business, I say new, post-Dodd-Frank, post-2010 business model for these. They're now banks. They're now they used to be investment banks that did their own trading. They've been, they're forbidden to do that because we allowed them to continue to exist. And as you said, many elements of their business are utility. They coin money in many ways. That also limits return potential.
It does. But in markets like this and in environments like this, they can really, they can make a buck or two. Let's take a quick break. When we return, Riley Sullivan from the Federal Reserve Bank of Boston joining us next to talk about an analysis of regional economic and issues facing New England. That is next here on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Protecting your assets from the cost of long-term care takes more than good intentions. It takes a plan. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, shows how these trusts can help protect certain assets from nursing home costs without giving up everything you've worked so hard to build. You may be surprised to learn that you can continue living in your home, receive trust income, and still maintain important flexibility in your planning. The guide also explains how these trusts may help your family avoid probate and preserve important tax benefits for future generations. If protecting your home, investments, or other assets is important to you, request your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for The Financial Exchange Radio Show.
Joining us now is Riley Sullivan. Riley is the lead policy analyst with the New England Public Policy Center at the Federal Reserve Bank of Boston and conducts analysis of regional economic and policy issues in New England. Riley, thanks so much for coming on and joining us. Appreciate it.
Yeah, thank you so much for having me.
So we're going to be talking a bit about small businesses today, of which we are one here in New England. And you point out that the contributions of small businesses in New England outpaces the rest of the country. Can you talk to us just about what you were able to measure here over the last? It looks like you looked at a 23-year time period of employment here in New England from small businesses.
Yeah, so we looked from the period from 2000 through 2023, and we found that small businesses, which are defined by the Small Business Administration as firms with fewer than 500 employees, employed roughly about 3.2 million workers in New England. That accounted for about 47% of the region's total employment. The national rate is about 46%, so it's really only slightly larger in New England, but on average. But throughout the region, there's quite a bit of variation. So some of the other states besides Massachusetts, they were all above the national rate by quite a bit. Massachusetts was a little below. So there's a lot of variation within our small region.
What is your sense of all this? Does this have to do with major population centers attracting very large employers? Is it that parts of New England are so rural that you can't have a 50,000 person company in rural Maine, for example? Yeah. What did you find in terms of the differences between, say, Massachusetts, Connecticut, Rhode Island, and some of the other New England states?
Yeah, no, you're exactly right. So it has a lot to do with the population density. So Vermont which is has the highest share in the region. About 63% of their total employment is within small businesses. Over 25% of that is in small businesses with under 20 workers. And they are the third highest concentration of small businesses in the country, behind just Montana and Wyoming. So, it really has a lot to do with, this high concentration has to do with these large businesses not being able to really concentrate in a city if they're not able to attract a lot of workers. So the parts of the region that have much lower shares of small business concentration are, Suffolk County that has Boston, around Worcester, Springfield, parts of Connecticut with New Haven and Hartford. Even, around Grafton County in New Hampshire that has Dartmouth Hitchcock Hospital. That makes it the outlier in northern New England. It's the only county that has below the share of national share of small business employment.
Talk to me a bit more about Vermont. I mean, they do stand out, like you mentioned, one of the highest share of workers employed at small businesses across the entire country. I don't know in detail Vermont's population density, but is this purely a story of population density and joining states like Montana in attracting small businesses, or are they doing something specifically from your perspective to cater to those small businesses and really favor them over large employers?
Yeah, no, really a lot of it does have to do with the population density, but also the combination of, the sectoral composition of employment. So there are a lot of healthcare and social assistance jobs in New England. A lot of those in other parts of the country are more likely to be in larger firms, whereas in New England, they're a little more likely to be in these smaller businesses. So these smaller independent hospitals, small health centers, those are big employers around Vermont. There's also more small retail trade, also hospitality, leisure and hospitality, accommodations, food services. They're less likely to be these large chains in Vermont. They are more likely to be these small firms.
The data do show that New England small businesses generated nearly 90% of net job creation during the period that you looked at. Mm-hmm. And I mean, that's pretty massive. Do you have a sense from the data of what's... I could think of two factors here, right? It can be really strong small businesses. It can also be big businesses who are locating jobs elsewhere. I think of one of the largest employers in our region, Fidelity Investments, hiring a lot more outside of New England over the course of the last 20 plus years. Are you able to measure that effect of, hey, what is the driver here? Is it really strong job creation from small businesses or just weak job creation from larger ones?
Yeah, so like you said, 90% of the job growth over that period was generated by these small businesses. And we find that it's very concentrated in Vermont. The other states besides Massachusetts saw this effect much more. It was surprising just given that, like I said, they're under half of the total employment. So it was surprising that so much of the job creation was by these small businesses. But a lot of it, other research has shown that a lot of that, it's more dependent on the age of these businesses. So a lot of this job growth has been from young firms that are small and grow into being larger firms. And then larger firms tend to have more stable employment levels. They have fewer fluctuations on average. So it's these small firms eventually are growing into larger businesses, the successful ones.
Riley, I suspect that when most of our listeners think of the Federal Reserve, they think about, big policy decisions around interest rates, testimony today from the head of the Federal Reserve in D.C. Why does the Boston Fed do this kind of research? And what makes this important to the Federal Reserve's mission?
Yeah, absolutely. Thanks for asking that. So the Boston Fed, it's one of 12 regional banks around the country. So we cover the 6 New England states. So each research department at the 12 regional banks has a regional research group. So at the Boston Fed, that is the New England Public Policy Center where I sit. We conduct a lot of research related to the New England labor market, among some other policy related regional work, and we just thought it was important to try and quantify and highlight some of the contributions of small businesses to just the broader labor market picture of the region.
Again, Riley Sullivan is the lead policy analyst with the New England Public Policy Center at the Federal Reserve Bank of Boston, joining us today to talk about the contribution of small businesses to employment in the region. Riley, thank you so much for joining us. Appreciate it, and hopefully we get to chat again soon.
Yes, thanks so much for having me.
As I mentioned, Kevin Warsh continuing his testimony in front of the House. We'll have a full recap on what he did say on tomorrow's program. I do want to shift away from that, though, and speak for a moment about IBM, who in pre-market trading, stock was down by more than 20%, now even more, down 25% this morning, a quarter of its share price being wiped out. And this comes after IBM reported preliminary quarterly sales results that missed analyst expectations. So this was not a scheduled earnings call. Instead, IBM finding that their earnings were, I guess, why do companies do this, Marc? I think it's twofold. One, to prepare investors for what's going to come during their earnings call. Two would probably be, hey, when something's this significant, we've got to get it out there so that, there's no possibility for insider trading and problems from that perspective. Go ahead.
No, go ahead.
Big picture from what I can tell here is that IBM has spent a lot of money and effort over the course of the last decade transitioning from a old hardware business that was, in every business during the 1960s, 70s, and 80s, and trying to transition that into something more modern. They've made major acquisitions of big software companies like Red Hat, Hashi, Confluent. And we're in this moment now where if you are a company, the only spending you want to be doing is with an AI player. IBM is not front and center there. And at the same time, you're being hit with this double whammy of AI kind of scaring a bunch of traditional software businesses that IBM just acquired.
There you go. Yeah. Half their revenue comes from software, 30% from consulting. If you're increasing spending on AI infrastructure dramatically, there's not money left for the other stuff.
Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning and welcome back to the Financial Exchange. After a modest sell-off yesterday in equity markets, we've got all three major indices in the positive this morning on a Tuesday morning where Kevin Warsh is heading to Capitol Hill to testify in front of a House panel. You've got the NASDAQ up about a percentage point, 246 points in early trading. The S&P up about 0.5%, 35 points, and the Dow Jones Industrial Average up 46 points, basically flat, up 0.1%. So far in early trading. At 8:30 a.m. this morning, Mark, we got a report from the Bureau of Labor Statistics on the state of prices here in the United States. And this is my first time saying this in a while. It was actually a pretty good report. Surprisingly, not only did energy prices fall, but overall in the June to May timeframe, you saw prices, even excluding food and energy, that flatlined in the month of June compared to May. And so specifically energy prices down. We know gas prices have fallen since May, with tensions that had dissipated in the month of June between the U.S. and Iran. Easy there, Tucker. You just breaking stuff.
Something just fell out of my microphone.
Oh, well, I wouldn't worry about it. It'll be fine. Nonetheless, you had a overall price that fell by 0.4%. June compared to May, prices down 0.4%. When you strip out those pieces, the price is basically flatlined June over May, which, given the pace of price increases so far this year, would be welcome news if we could get back to eventually a state of 2%-ish price increases. This one report does not indicate we will get there, but was, I think, definitely a welcomed cooling off period after, again, the concern that I had about prices in the January through May timeframe, which was probably yours too, was not just about energy prices. Energy prices were significantly higher. That drove inflation higher. But even excluding that, you had core prices. You had prices moving everywhere. And whether that was because of wealthy boomers who are spending money like it's going out of style, whether it was because of AI companies that are pouring money into employment and data center construction, whether it was oil prices that are seeping into everything else and causing core prices to go up, it was a concerning sign in the first half of the year or the first 5 months of the year. And this is the first sign we've gotten that, hey, maybe we can, move towards a cooling off period on prices.
Right. The question is always, what's really going on with inflation? the month-to-month figures are noisy.
Yep.
So you either could take an average, but that's a slow process, or you can trim extremes. Core is one way of removing things that you suspect are distorting the real inflation picture. And as you said, core was flat. There are other ways you could trim extreme price movements no matter what component they come from. It's not necessarily food or energy that'll distort the trend in inflation. It could be insurance. It could be cell phone bills. I use those two as examples because in the past they have given false signals or contributed to an overall picture which was unrepresentative. We did get median inflation, which is a trimmed measure, trims everything but the category in the very middle, the median. And median inflation came in at 0.2% month over month. So lower than the previous month, which was 0.3.
Yep.
But on an annualized basis, still in excess of the Fed's 2% target. Trimmed mean, which is another, as the name suggests, trimming measure. I think trim mean trims the top and bottom, or it trims like the top 8% and the bottom 12 or something that they arrived at through statistical techniques. Trimmed mean came in at 0, interestingly. So it could be that the observation in the middle that results in median inflation is not representative. Maybe trim is preferable. Maybe something in between is the true story. When you look at core, trimmed, mean, and median, the overall picture points to some disinflation, falling prices, if not outright deflation, which headline pointed to, which nobody thinks is sustainable.
So obviously, as we're seeing this week with oil prices, all of this stuff can reverse rather rapidly. Should you see oil prices shoot back up, you can see gas prices shoot back up. We could be, back in the $4 to $5 gas range within days should things continue. So I think all an open question here in terms of where prices go. But for the moment, a set of good news from the BLS on inflation here. We also, this morning before the bell, received earnings from 5 major banks: Citigroup, Wells Fargo, Bank of America, JPMorgan Chase, and Goldman Sachs, all reporting their earnings. Who's the last player that's going tomorrow? Morgan Stanley will be reporting tomorrow, if I'm not mistaken, among others. And across the board, unsurprisingly, but what you saw from bank earnings was pretty robust. You're seeing them make a boatload of money on volatility. Think of some of these banks as kind of toll collectors when it comes to markets. If you are seeing increased volatility in trading, they will make money on that from spreads and other areas of the market that they just kind of collect tolls on. And then also, if you see markets appreciating, that's good for their wealth management businesses and other sides of their business that make money on that. Combine that with big IPOs, SpaceX and others heading into markets or trying to issue new debt or issue new equity. All of that spells great news for major banks that participate in that stuff. Goldman Sachs probably the most impressive of the quarter. Earlier, their stock was up about 8% in early trading. So good news from the banks. Bad news, though, from IBM, as we were talking about before. And I focus on this for a few reasons. One, I've just long-term been kind of entertained by the, I guess, just misstep after misstep of what was once the most impressive technology company probably in the world, and has fallen so dramatically from those heights of the 1980s, I suppose it would be, when they were really the most front and forward company out there. But this year their stock had been appreciating quite a bit. The CHIPS Act had granted them $1 billion to build the first U.S. quantum chip foundry in Albany, New York. They were kind of talked about as this central company. President Trump actually signed an executive order directing the accelerated migration to post-quantum cryptography and directing IBM to really lead a lot of that. And this morning's earnings, they didn't report earnings. They warned that their earnings were going to kind of suck. Pardon my language. That's pretty much what they did. And their stock is falling by a quarter. They're wiping out a quarter of the value of their shares this morning on the news. And really the news seems to be, hey, we IBM, we're seeing the slow bleed away of our core hardware business. So we spent billions of dollars investing in software companies that were making a killing in the late 2010s and early 2020s, attracting all sorts of customers who wanted to put their business on the cloud and have their CRM system out there. And we can benefit from this at the exact moment that AI is threatening that entire business model. So I think it doesn't need to get much more complicated than that. Hey, we bought a bunch of software companies, and suddenly software companies are being valued at a much lower level than they were before. When you combine that with, hey, if you are a business and you're trying to decide where to spend money right now, you're going to cut anywhere you can in order to afford as much investment as possible in AI, which IBM just doesn't lead. And so I'm sure that their salespeople are out there grinding hard, but unable to really attract massive investment in the products that they have to offer. Why? Because every company wants a contract with Anthropic to get access to cloud right now, not IBM to get access to whatever they have to offer.
Yeah, that would be software and consulting.
Yep.
That's most of their revenue.
So there you have it.
What are you going to do?
Let's take a quick break. When we return, I want to talk about productivity. U.S. workers we're able to measure productivity. We don't have to go ask, Tucker if he feels like he's getting more done during the day. There's actually measurements of productivity, and they are up pretty significantly over the last few years. What's behind it is next on the Financial Exchange.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find interviews, highlights, and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
Mark, we kind of think of productivity as the holy grail of economic
It is.
growth.
It's everything.
It's not even economic growth. It is
No, it is,
improvement of a society.
No, it is. It is. You're absolutely right.
If you want to make quality of life better,
standard of
then
living, yeah.
humans need to become more productive over time.
Yeah.
Otherwise, you flatline.
Yeah, the reason we had no economic growth up until the Industrial Revolution, very, very little, like 0.1% on average, is that people didn't get, with the exception of a few bursts, like the invention of a new plow or a new field rotation system. Like you can only invent the wheel once and fire. You tame that.
Yeah.
Then what do? Every so often somebody invents a new way to put a harness on something that pulls a plow, an animal.
Sure.
Or something like that. But they were few and far between.
Yes.
Since the Industrial Revolution, it's been like one thing after another, as you know.
What has, well, I don't know if it's surprised economists, but we have seen a boost in productivity since COVID. And a pretty substantial one, if I'm not mistaken, right, Mark? Here in the United States, we measure productivity. It's a measurement of output over hours worked, right? Like plain and simple, how much are you producing for the number of hours that you are working? Right. And we've seen a big boost in that productivity really since COVID. And it's been tempting to blame that on new technology like artificial intelligence. There's probably a bunch of other explanations too. But while productivity can measure the degree to which productivity has increased, there's no real way that it can measure where it's coming from, if I'm not mistaken. So we're left theorizing about it. But to what degree has this productivity increase been significant? Like, how much are we talking about here?
Well, year over year, let me just give you the facts. And this comes from the BLS. Year over year, output per hour through the first quarter, the latest period for which we have data, grew at 2.8%. To put that in, it's been in the 2 to mid 3% range since 2023. It rose a lot coming out of the last recession. It always does coming out of recessions because businesses do more with fewer people coming out of recessions. Then they start to hire as the economy, as the expansion matures, and hiring increases the number of hours worked, which lowers productivity, according to the definition that you gave earlier. So early on in the post-COVID recession recovery period, productivity behaved exactly as you would expect. It spiked and then sort of plunged. It was negative for a period of a few quarters in 2022 into 2023. And then it started to spike again. Looks a lot, in fact, like the pattern in the 1990s. We had a recession in the early 1990s. Very little hiring coming out of that recession. Productivity spiked. Then it fell as hiring started to improve. And then it started to climb, which is, again, not unusual post-recession. So it's too soon to say, Mike, this to sum it all up, sorry, I'm just carrying on here. Let me just get to the point. Productivity always rises dramatically coming out of recession. Then it falls as hiring picks up. And then in a prolonged expansion, think of the 80s or the 90s, it tends to creep up again before repeating that same pattern, working up to the next recession, which is unfortunately inevitable. But it's much higher over the past several quarters than it was at any time during the 2010s, which is why it's noteworthy.
Right.
The 2010s were also an exceptionally low productivity period. It could be that most of the hiring was in, so we can get at where it's coming from. We know where it came from in the late 90s, for example. I'll just say capital deepening, more people using computers and stuff like that, and in the manufacture of electronics specifically is where a lot of that productivity increase came from. And I suspect it's coming from places like computer and electronic manufacturing. We actually know how many people are employed there versus their output. Higher employment in those industries, computers and electronics, has actually gone down over the past few years, while spending on computers and electronics has exploded. That translates into higher productivity in that sector.
So if you want to take the pessimistic view here, changes during COVID, fewer people available for work, remote work may have led to a big boost in productivity. We were all
again totally
working
characteristic
remotely,
though of coming out of recession.
Very much so. So pessimistic view would be that, hey, we got a boost in productivity because we came out of a crazy weird recession during 2020 and productivity got a boost.
Always
if you want an optimistic view, it would be that the technology that we're in the very early stages of implementing here with machine learning and artificial intelligence is going to make people in some of the most expensive sectors of work so much more productive that we as a society, as a U.S. society, can produce a bunch more stuff. And I don't think we have any evidence of that yet.
The pattern is totally typical. A big rise, and I'm sorry, I'm repeating myself a little bit, but just for emphasis. Big rise in productivity coming out of the recession always happens for obvious reasons. Then it plummets as hiring starts to recover. Again, slower output growth, higher hours worked growth. That means a slowing productivity rate. And then a gradual, you see this pattern in every single business cycle in the post-war period. What makes the past several quarters noteworthy is that the year-over-year changes, quarter to quarter, in productivity are a lot higher than they were in the last decade. Not as high as in the late 90s, though we're approaching that territory. And many are inclined to attribute this to AI. But you have to be, Mike, you got to be careful here. Is it spending on AI? And we all know that the defining characteristic of electronics and computer industries is that you do more with less. Moore's Law, et cetera. That's not quite what Moore's Law says, but similar advances drive higher productivity in those industries. Is it just that we're cranking out more data center equipment with the same number of people? Is that what's driving this? Or is it that you and I and others and people listening are using AI and becoming more productive? That's the big, I think,
That's the big question. That's the big question for the payoff of the entire artificial
does that make sense what I just said? I'm thinking a little
bit out loud. It does to
me,
but maybe I'll rerun the tape and find out. Why young investors are betting it all. This is from Bloomberg today, and my answer would be because this is what they do during bubbles. This is what everybody does during do you remember all the interviews that you probably read about in the late 90s about in the Journal and the Times about 25-year-olds overnight becoming millionaires from day trading stocks in the tech sector? Well, guess what? It is happening again in stocks, cryptocurrencies, all sorts of different betting markets, and I don't think that this is some societal thing with Gen Z becoming, loose and crazy with their money. I think it is indicative of a asset bubble that will eventually pop and then teach those people the hard lesson that we learned several times before. But too many of these pieces, I think, are quick to blame a younger generation that they want to gamble all their money away. And maybe I'm wrong. Maybe Gen Z, because of how much exposure and interaction they have with gambling sites, is genuinely gambling their money away more than other generations. But I suspect it is purely indicative of what we've seen from all sorts of markets over the last 5 years that have just gone in a straight line upwards, parabolic. Let's take a quick break. When we come back, speaking of parabolic, we'll take a quick look at equity markets next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Very busy day on Wall Street as traders react to bank earnings and inflation reading and ongoing testimony from Fed Chairman Kevin Warsh. Furthermore, oil prices have eased after President Trump moments ago backed away from his plan to impose a 20% charge on cargo ships through the Strait of Hormuz. Right now, the Dow is flat, S&P 500 up over 0.4%, NASDAQ up over 1%, or 262 points higher. Russell 2000 is up 0.4%. 10-year Treasury yield is down 4 basis points at 4.56%, and oil up nearly 1%, trading at $78 a barrel. Investors saw a softer than expected inflation reading that slowed to 3.5% in June, better than estimates of 3.8% and down from the 4.2% reading in May. As for bank earnings, JPMorgan Chase, Bank of America, Goldman Sachs, Citigroup, and Wells Fargo all reported better than expected results for the second quarter. And outside of bank earnings, IBM stock now plunging 26% after the tech giant posted weaker than expected preliminary second quarter earnings, attributing the miss to customers spending their money on chips and servers amid AI-driven shortages. This marks IBM's largest intraday percentage decrease for the company on record. I'm Tucker Silva, and that is Wall Street Watch.
Mark, I want to revisit our inflation conversation. So as we mentioned earlier today, 8:30 a.m., the BLS released their inflation report. It was good news. Again, price for all items in June fell 0.4%, largely driven by gasoline prices, which moved lower compared to May. Still, though, inflation up 3.5% over the last 12 months. And with what we've been seeing over the last few days in oil prices, we could get back there. Here is something that I find very, very consistently across folks that are approaching retirement. Folks that are heading towards retirement are deathly afraid of a market crash, which is understandable. They've seen people go through the 2008 crash, the 2020 crash, make bad decisions, pull money out, and dramatically hurt themselves from that. They are almost never afraid of inflation because for the majority of their lives, it hasn't really been a problem. And I will honestly say that for most people that I meet in that situation, granted, I'm generally meeting with folks that have saved money for retirement and have something to worry about when it comes to a market crash, they are actually more exposed to the high inflation scenario from a real problematic standpoint for their future than they are the market crash scenario, right? Like when I look at the average person, they have enough stuff diversified that, hey, a market crash isn't likely to be the thing that hurts them that badly. Whereas prolonged period of inflation, that could be a killer. When we think about price changes, rule of 72 makes this kind of easy, right? But 2% price increases, which is the Fed's stated goal, makes your basket of goods double in cost every 36 years. Most retirees can live with that. Talk to me about just how dramatically that changes as price levels move up, right? Like, you can do the math yourself at home, I suppose, but if you run out a 4% rate of inflation, right, double the Fed's overall goal, then prices are doubling in how long is it?
About 18 years. You can, again, use the rule of 72 that you cited. The rule, by the way, is just divide the interest rate, in this case, the inflation rate, into the number 72. If you want to be really precise, there are more rigorous ways to get at that, but that is perfectly fine for back of the envelope. But to answer your question, prices double roughly twice as quickly. Now, it's not always linear, so to speak. It's not always one for one like that. But prices are going to double every 17 and a quarter, or if you use the rule of 72, 18 years, like you said.
Here is the problem, folks. If you are approaching retirement, I can fully understand why a 30% market correction, which we tend to see every decade or so, is top of mind and concerning, especially when you see stocks climbing to these levels. As I mentioned, what I find far more often is a higher period of inflation for retirees would be far more damning to them than a market crash. If you are finding yourself slowly getting more conservative when it comes to your investments, if you're sitting on large amounts of cash or money market CDs, these are the types of things that fortunately protect you and insulate you from a market crash, but leave you very susceptible to high periods of inflation. These are the exact types of assets that, while you might not lose money on them like you would a long-term bond if interest rates move up, you lose purchasing power over time. If you are approaching that period of time and wondering how your portfolio stacks up against different market conditions like high inflation and how that could affect your retirement, please call the folks at Armstrong Advisory Group. Not only do we stress test things like Social Security being reduced or Medicare costs, healthcare costs being higher, we do like to test out, hey, what happens in the event of higher inflation? What happens in the event of a unexpected health situation or a market crash on your retirement, on your specific retirement, not your neighbors or your cousins or your nephews? Give the folks at Armstrong a call. 800-393-4001. We offer free consultations where you can come in, kick the tires, and ask us questions. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark, more of these stories about AI companies trying to cash in seem to come up every day. If you want to take the pessimistic view, running for the exits. If you want to take the optimistic view, it's just, hey, we got to raise more money so we can continue to cash in on this moment. But data center builders are racing to offload stakes worth billions. They're likely companies that you're not terribly familiar with, or at least I wasn't. But bankers are working to sell stakes in firms including Netrality, Data Centers, DataBank, EdgeCore Digital Infrastructure, and others with properties located all across the country. They're pitching private equity firms on hot asset classes to invest in here as everyone and their mother is trying to get a hold of compute power. I have no doubt that these companies will be able to sell their assets at quite high prices at this moment in time, considerably higher than what they built these things for a decade ago. The thing that I just suspect without any real firm understanding of how all this works, I don't think that we have a good means of measuring what's a good versus bad data center. I'm just going to assume here that just because you're capable of building a data center doesn't necessarily mean that they're all created equal. I assume that there are companies that are really good at it and companies that are not so good at it. And I think in this moment in time, like we see during every bubble, you're going to have a bunch of companies that get acquired that turn out to have nothing that's terribly compelling here, and a bunch of things that are going to be acquired that are very compelling. And it's going to be really hard to tell the difference in the moment.
Does this mean the optimal time to sell this stuff is now? Of course, I think the answer is yes. That's kind of rhetorical.
For these companies?
Yeah.
That's what these companies are telling us, right?
If the optimal time is right now, it follows that you're going to get more now than you would in the future. Is that a safe statement? You know where I'm going with this.
I do know where you're going with it. I guess I'm not comfortable going that far, right? There
well,
can
then why
be.
Sell now?
I need access to capital to keep building.
Okay. But you built for revenue, which hasn't materialized, so you're going to sell instead. What does that say about prospects for the revenue generating prospects of that
pessimistic view? Yeah, I'm getting out because prices are ludicrous and I want to sell my business right now when things are high.
Sorry.
Optimistic view, hey, I can sell 50% of my company and build 10 more data centers over the course of the next year rather than the 5 that I was going to be able to build otherwise.
Okay, and is that, forgive me if I missed it, but is that why they need money?
They don't say why they need money. They just...
Okay, that would be good to know, I think.
Sure, yeah.
Otherwise, if this is so
you won't ever know.
This is so great. Why you? I guess we will after the fact.
Yeah.
Why are you trying to unload it on me if it's so great?
Yeah, look, I think
maybe
this...
I'm misreading this.
Plainly follows in the trend of many other companies. SpaceX going public, Anthropic trying to go public, OpenAI trying to go public. You can look at it in one way as boy, these guys are just trying to cash out because the prices are ludicrous. You can look at it another way of, hey, Anthropic needs cash to continue to build this stuff out, and they truly believe in it. And you will have people lining up on either side of that argument. And I don't know. I think ultimately I get a sense of where this whole market's going, but I don't know what on what timeline. And we will only know, like you said, after the fact. Let's take a quick break. When we return, Stack Roulette is next.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
The Financial Exchange is a proud The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
It is time for Stack Roulette here. Mark, what do you have for us on the Tuesday edition?
Mike, last week we talked about memory chip maker, SK Hynix, listing on American markets. They're a Korean company, but you can, through some machinations, raise capital on American markets, and their share price popped, as was expected, up roughly 20% in the last week. Samsung wants to get in on the action now, take advantage of frothy American markets. We generally we don't think of them as, at least I don't think of them as a memory chip maker. In fact, they are. It's like one of the biggest contributors to their profit, not necessarily to their top line, but to their bottom line, so to speak. So they look at Hynix. Share price has roughly doubled this year. Samsung's no slouch. Their share price is up, 100%. So Samsung's doubled, Hynix has tripled. Excuse me. So Samsung looks at that tripling, I guess, with some envy. They're looking to list on U.S. and a U.S. exchange. Not clear how much capital they want to raise. Maybe not even the primary motivation, which could just be a little bit cynically, but understandably, get their share price up. American markets attach much higher valuations to companies that do the exact same thing.
Yeah. To be clear, just because they list here does not make them a component of the S&P 500.
No, these are ADRs.
Or any of that. They are still Korean companies that are just listing their shares here. But to your point, it does make it easier for the retail investor to grab shares if they are U.S. listed. Otherwise, it's complicated. You've got to do a currency exchange. You've got to actually go buy it. You can still do so, but it's much more complicated than saying, hey, we actually have U.S. listed shares in U.S. dollars on U.S. markets, and you can go buy the American deposit. Is that what an ADR is? American Depository Receipt.
I think so.
Right on U.S. markets at the same trading costs as anything else that you could buy. So yeah, they are all seemingly jumping in on the action, and at least in SK Hynix's case, for the short term, seeing a big benefit from doing so.
Yeah, it's all about this. It seems, and this is obvious, but it's all about the share price bounce. Again, American investors or investors on American exchanges, they don't have to be American, are willing to attach much higher multiples to companies that do the exact same thing but happen to be listed elsewhere.
Seems to be the case. Gen Z has been facing a lot of blame for, all sorts of fun things, because we always like to criticize the coming of age demo and blame them for being lazy and having weird social behaviors and not knowing how fax machines work, which they don't. Big idiots don't know how fax machines work. But it turns out one of the things that we were blaming them for, they may not actually be guilty of, which is ruining the alcohol industry. 74% of Gen Z who are at the legal drinking age reported drinking in the past 6 months. That is up from 66% just 3 years ago, which is a pretty huge jump. I suppose that does make sense if you were living in COVID times and unable to socialize, and suddenly you've been thrust into the first 21-plus social life that you've ever had, then your drinking rates probably increases. The total adult population drinking rate is 76%, but what I was surprised to see was that only 71% of baby boomers consumed alcohol in the past 6 months, which is the lowest drinking rate of any generation and down by 2 percentage points from 3 years ago. So
it interferes with a lot of medications.
Yep. So screws up your medications. That could make a fair bit of sense.
Pretty high correlation there, I would think, between the more stuff you go on, which is inevitable as we age, and what you can drink.
Yeah. So the survey was among more than 32,000 people across the 15 largest alcohol markets, and has generally detected a decline in drinking overall over the last few years. So I think that's the overall, sorry, alcohol companies, but good news is that drinking rates have been slowly declining over time. at least here in the United States. In other parts of the world, China, India, it's actually increasing. So we will see where this goes.
Is wine in there? Maybe a stupid question, but I
think it includes anything: beer, wine, alcohol, anything with
okay.
Moonshine that you're brewing up in the backyard in Rhode Island. Anything that you can get your hands on.
Like I lived in Massachusetts for 30 years, but okay.
No, I'm just going to call you're my main source on Rhode Island news here.
My heart is in Rhode Island.
Where I need to go to get my moonshine as I cross the state border is, Marc Fandetti tells me all the news. Can we talk about watering bans? Drought?
Yeah, go ahead. I don't care.
This has been just kind of rubbing me the wrong.
Yeah.
Are you in a watering ban? So my town right now.
That sign's been posted
right?
for years. They never changed.
Yeah, haven't changed. So right now, my town is in a full-on watering ban, meaning you cannot water any single day of the week. You can hand water only, and
hand water,
like a watering can.
Well, what about a hose?
Yeah, but
hose
then you
can
fill
do
up
too.
the watering can.
Yeah, hose you can do too, but you cannot have your sprinkler system irrigating your lawn, which I understand.
My town flat out ignores that. Then
have no water, and that's my point: is that there is no enforcement mechanism of this, and it is a stupid policy to have. If you want to make it so that people don't water their lawns, then come up with the easy economic solution.
Charge more for water?
Charge a boatload of money for water.
Yes.
No.
Economics will fix this problem. And by the way, you don't have to do it by
Tucker makes a good point. Go ahead, sorry.
Well, no, you can do it in a way that people can still not, die of
after
thirst.
X number of gallons you get
Precisely.
charged. How about that? Make it a progressive.
Okay, this is what the average family of 5 consumes for water to bathe, drink, and cook. And then when we get beyond that in times of drought, we're going to charge you outrageous amounts for water. And so
what if
you are
can afford it,
welcome. Yeah, then great. Water your lawn.
Yeah, but the whole point is you're going to run out.
Well, but that's my point is that
Zuckerberg moves into town. He'll drain the reservoir.
Yeah, but I don't think it's that dramatic. And yes, it will create a situation where lawns in Weston and Wellesley look far nicer than the ones in
grass is greener.
Westboro and Norfolk. But
hey,
this will solve the problem. Stop trying to ban people from watering their lawns. They're not going to listen. They're going to do it at midnight so nobody notices. Just charge more.
I assume
Fix the problem.
I assume that town administrators who are professionals have thought about
I think
that.
it's probably a really bad look, would be my guess. You don't want the optics of Wellesley looking a lot nicer than Norfolk in terms of their lawns, and so we come up with a stupid solution instead. Sorry, that was my 2-minute vent of the day. Have a great rest of your afternoon. Equity markets mixed. Dow now down 0.5%. S&P and NASDAQ in the positive. We'll be back at it tomorrow. Have a great rest of your day, folks.